If you're sitting around wondering how to get a low interest business line of credit for bad credit, you are at the right place. I want you to stick around till the end of today's conversation because I'm going to share with you all the ins and outs of getting a low interest business line of credit for bad credit. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's convo, I want to share with you a couple of tips, a couple of proven tips that will help you get a low interest business line of credit for bad credit. Getting approved for a low interest business line of credit for bad credit doesn't have to be a shot in the dark, folks. There are steps, proven steps you can take to improve your chances of qualifying. And all the steps I'll be sharing with you boil down to improving how you manage your business on a day-to-day basis and especially finances. So I want you to do your research. Don't simply walk in the dark and hope that you will get a low interest business line of credit for bad credit. You want to explore the options available and familiarize yourself with things like rates, terms, amounts, and more. And in today's show, I have 10 steps I'll share with you. But before I get into the 10 steps, I just want to have a quick overview here. You can get a 100K, 200K, 1 million K business line of credit for bad credit. It doesn't matter. It's not about the amount itself. It's about how you go about applying for the loan, applying for the business line of credit. And the thing here is that why should you get a line of credit over another funding option? Most business owners in our research like the flexibility. It gives you a way to get cash that you can use for any business related purpose, right? I'm talking here about paying suppliers, paying vendors, paying staff. You don't have to constantly apply for a new loan. The money's there. It's similar to a credit card, right? And the best places to get a business line of credit for bad credit includes banks. So you have traditional banks, you have credit unions, you have alternative lenders, you also have the fintech lenders. So fintech lenders such as Lendio, you have OnDeck, and so on and so forth. Even national funding, they have business models that cater to businesses that have bad credit, no credit, or fair credit. So it's just better to kind of find exactly what kind of business loan you're looking for so that you can get the money you need to expand your business and grow. All right, after giving you the overview, let's just go into the step by step. And there are 10 steps. And step number 1, if you want to get a low interest business line of credit for bad credit, you need to run your business as a legit business. Very important, folks. You want to take care of the fundamentals. What is that? You need to incorporate. When it comes to incorporate, you need to set the best legal structure for your business, right? There are actually 5 business structures that we know of. So you have the sole proprietorship, partnership, LLC, C Corp, and S Corp. The thing here is that you want to have LLC. Why? Because you're trying to segregate your personal finances and personal liabilities from the business's liabilities. Very important. Don't go sole proprietorship. We don't want that. We don't want no partnership either. It's more complex. You want to go with a one person LLC. If you are a one person, it doesn't matter. You can still set up an LLC. LLC stands for what? Limited Liability Company. You need to get an EIN. Employer identification number, very important. Go to the IRS website, you just apply. It takes a few minutes, nothing complicated, easy peasy. You need to open a business bank account and if possible, get 1 or 2 business credit cards. That's kind of cool too. Don't forget to set up accounting and financial reporting, folks. That's very important. We will the whole idea is you want to present a business image to the lender. You need to file business taxes. And you also need to follow responsible business practices. When lenders look at your application, you don't want to give them any reason to think twice, right? Especially if you have bad credit, because the odds are already in your against you. So you want to do everything possible to actually paint the best image, the best picture upon your business. So for this reason, it's important to maintain successful business practices, especially in the months leading up to your application. First, make sure that you pay all your bills on time. This includes suppliers, utilities, rent, and outsourced services. So when your cash flow is positive, lenders know that you are responsible with payments. Also, be careful not to overload your business credit cards, which could harm even more your credit score. Okay, and you need to build and maintain good business credit. Even if you have bad credit, either personally or at the business level, you can still take initiatives every single day to improve the business credit and the personal credit for that matter. So having a strong business credit is essential, but not necessary. It is essential, but not a requirement. For getting a business line of credit. So to keep the doors to a business financing open, be sure to always keep your mind on building good business credit. Pay your bills on time, ensure your financials are properly reported and tracked, and keep a low debt to credit ratio. All right, step number 2, I want you to write it down now, folks. Step number 1, you need to run your business as a legit business. Number 2, you need to learn how to qualify for a business line of credit. This is one of those things where you got to be very specific. You have to understand exactly what it takes to qualify for a business line of credit. And there are several things. So you have credit score, revenue, time in business, and collateral. Those are the four main criteria that lenders pay attention to when evaluating the strength, the solidity of a business line of credit application. Credit score. It's no longer the ultimate business financing requirement though, but your credit score, your personal credit score that is, can influence whether or not you qualify. So generally, lenders will look at both your business and personal credit scores, and this helps them to fully understand your business's current financial situation as well as your trustworthiness in repaying debts. Okay, so, but it doesn't matter if you have a 500 or 580 or 550 credit score, you can still qualify for a business line of credit. They pay attention to revenue. And so your monthly or annual revenue is another important criterion to look for when it comes to qualifying for a business line of credit for bad credit. Because revenue gives lenders a great picture of your cash flow, right? In other words, your revenue shows how much money is coming into your business and the amount you can afford to repay. Now, very important to understand that if we want to dig a little deeper into advanced accounting here, there is a difference. There is a distinction to be done between revenue and cash flow, because revenue is just the sales you're making, and some customers might pay, or some customers might actually take some time to repay you. So you might have a discrepancy, a gap between the revenue you show on the books versus the cash you have in the bank account. Either way, it's important. It's always great to have a healthy revenue amount. Then you want to talk about time in business. Lenders pay attention to that. Even though it's not I would say a quintessential criterion, they still want to pay attention to it. What I'm trying to say here is that the longer you are in business, the better. But if you are a startup or you are an established business that is struggling, that has bad credit, you can still qualify. Okay, and also collateral. You need to determine what if any collateral you will put up for your business line of credit. Okay. Now, previously in the 2000 or the 1990s, collateral was a must-have when it came to getting an approval, especially for larger amounts. We're talking here about business lines of credits for bad credit or for good credit. It doesn't matter. Nowadays, you have the emergence of fintech lenders, and those players, they are using another constellation of tools, of algorithmic tools that do not necessarily require the presence of collateral. So just want to know that, all right? I want to talk to you now about step number 3. Step number 1, you want to run a legit business. Number 2, you want to learn how to qualify for a business line of credit. Number 3, you need to apply when you don't have an urgent need. It's very important, because the best time to get a business line of credit is when your business does not need one. Why? Banks and lenders in general will mostly be willing to come to your rescue when your cash flow is promising and you aren't desperate for a loan. You'll then be able to build a strong credit history. Additionally, if you have an existing credit line, then you can draw from it at any time. If an urgent expense like payroll or a lucrative new opportunity comes along, then you can jump on it without skipping a beat, right? You'll only pay interest on what you take, meaning you will not make unnecessary payments. So and this advice actually applies at the personal level also. Banks and lenders in general will only come to your rescue, will only lend to you when you don't actually need the money. It's a little counterintuitive, but that's the way things work. And so step number 3, apply when you don't have an urgent need. Step number 4, I want you to compare your business lines of credit options. There are a lot of options here, folks. When we talk about getting a low interest business line of credit for bad credit, there are a couple of options you have to be aware of. First, bank versus credit union versus fintech. Which options should you go for? For what's important for us, if we're talking strictly about low interest business line of credit for bad credit, the best is either bank or credit union. The problem is if you have bad credit, fintech lenders are your best bet, but they don't have I would say very low interest business line of credit. But with a little bit of luck, if you're able to put forward the best application, you might be able to get a low interest business line of application even through a fintech lender. You also have to think about secured versus unsecured lines of credit. Of course, in today's conversation, we haven't mentioned whether the line of credit will be a secure or unsecure, but all you have to know is that a secure business line of credit has collateral backing it, while an unsecured option does not. Ideally, you should try to avoid tying up your personal assets while getting business financing. This is very important. This is like business funding 101. Okay, so we're going to focus this step-by-step I'm giving you today will help you actually get a low interest business line of credit for bad credit that is unsecured, that does not require any PG, any personal guarantee, or any collateral. And you also have to think about short versus long term, because in applying for the best business line of credit, you need to know how much you will need, but also how long, over how many months you will need the funds for. All right, folks, I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweaty Kiwi Show. I'm still talking to you today about how to get a low interest business line of credit for bad credit. Step number 5, I want you to avoid the top 3 business line of credit application mistakes. There are 3 mistakes that a lot of folks make, a lot of entrepreneurs make, and I want you to avoid those. First, not having a clear idea why you need the funds. Number 2, rushing through the application. And number 3, being dishonest on the application. Those 3 are very, very, very quintessential. You need to avoid them. First, not having a clear idea why you need the funds. You got to have a clear idea why you need the funds anyway in the first place, right? And the best way to do this is to actually write a business plan. Yeah. You might be thinking, well, you know, I just want to borrow $100,000 or $1 million, but a business plan is not just for a business loan. A business plan allows you to have a vision, allows you to chart a clear path forward for your business. And it's also great because it also, that plan encompasses all the financials you need that will help you convince a potential business line of credit lender that you are legit. So you need to have a clear idea why you need the funds. Do you need the funds to cover payroll, to pay suppliers, to pay vendors, to seize an opportunity in the industry, to launch a new product? You got to be clear about that. And don't rush through the application. Take your time. Simple errors can cause you problems, such as a typo in the EIN, for example, or using the incorrect business address. So you want to really set aside at least 1 or 2 or 3 hours of your day to really focus on the application. We're talking here about money, folks. Money. That's money for your business. So take the time for it. And please tell the truth. Don't be dishonest on the application. All right. Don't overstate or understate anything. Revenue, expenses. No, this could hurt your chances in the long run. Even if you got the line of credit in the first place, if the lender finds out, imagine the problems you might have. Right. Okay. Step number 6, you need to understand the total cost of interest rates and fees. And so we have annual percentage rate, APR. So when it comes to rates, it's often thought that APR is the only rate to keep an eye out for, but that's simply not true. APR, or annual percentage rate, is an annualized percentage of the original loan amounts plus the additional fees. And what are the additional fees here? You have draw fees, payment processing fees, late fees, termination fees, prepayment fees, and you also have and some business some business lines of credit will allow you to actually borrow through a simple interest rate model. So the simple interest rate is the interest you'll pay to the lender on top of the loan you're borrowing. Okay, so this is just something you need to have in mind. You need to keep in mind. Step number 7, folks, we are still going through all the steps you need to get a low interest business line of credit for bad credit. Step number 7, you need to meet the requirements and prepare your paperwork. So once you have a solid idea of where your business stands, it's time to get your application ready, right? This means what? It means that you need to prepare the required documents, folks. Again, in the context of honesty, in the spirit of honesty, in the spirit of being forthcoming, you want to take the time to gather the important paperwork. I'm talking about the fact that generally lenders will require some of the following information before approving your request: personal information, your name, social ID; business information, your business's name, entity type, tax ID, and the industry you fall into; credit scores, including personal and business; financial information like annual revenue, bank statements, and if you apply through a bank, balance sheets, profit and loss statements, and other documents; tax returns, including business and personal; any existing debts through a debt schedule; legal documents, especially those that bond you to any partners. The lender you apply with may ask for much more or less information. Okay, one thing we have seen in our research is that banks tend to evaluate each application thoroughly and will request more information, while fintech lenders require only the essentials. Step number 8, you need to know your business line of credit rates, terms, and fees. So earlier I was just telling you to understand, you need to understand the total cost of the business line of credit. And right now we want to dig a little deeper here. If you're getting a business line of credit for a bad credit, it's best to understand what you will be paying for, specifically here, how your interest payments will be structured, and any other applicable fees. Of course, you want to shoot for low interest, right? In my mind, low interest means what? It means single digit. It means anything less than 10%. Even if you have bad credit, either at the personal level or the business level, you can still qualify for a low interest business line of credit for bad credit. It's all about how you structure the application. It's all about how you present the information. It's all about responsive you are when the lender reaches out to you. Okay, so one thing I want to say here is that not all lenders will charge the same fees, but it's important to ask your lender about any they may charge. Some of the fees you may encounter include draw fees. This may be charged anytime you withdraw new funds from your revolving line of credit; payment processing fees. This may be charged to deliver your funds instantly instead of a standard 1 to 2 day time window. Late fees may be charged when you miss the standard payment. Termination fees may be charged if you end the line of credit before the designated time. Prepayment fees may be charged if you pay off the borrowed amount before the term is over. So to avoid any surprise charges, always be aware of rip-offs and request information about potential fees before signing. Step number 9, folks, and this is very important. I want you to find the best business lines of credit for bad credit. So we actually have done a little rundown for you here, and we're going to share this with you. So we have found five fintech, most of them are fintech lenders that are very good at providing business lines of credit for borrowers with bad credit. And the loans are the rates are pretty reasonable. So we have Lendio. Lendio is best business line of credit overall. And the pros and cons here: you have fast application, a wide variety of funding and lenders, and the personalized guidance and expertise. And the cons: high interest rates on some credit lines. And people have been reporting that Lendio was doing hard credit inquiries, not soft, but hard. Bluevine is great for low rates. If you're looking for a low interest rate business line of credit for bad credit, Bluevine is kind of cool. So the pros here: low starting rates, monthly payments on some lines, same or next day funding. What about the cons here? The high borrower requirements, potential large fees. And Fundbox. Fundbox is great for poor credit. The pros and cons here: pros, automated application, everything is done online. You have low approval requirements, fast funding, that's pretty cool, we love that. And weaknesses: you have low maximum loan amounts, high APR, and then you have street shares, great for larger amounts and longer terms. So the pros and cons here: pros, competitive rates and APRs, modest application criteria, long line of credit repayment terms. We love street shares, pretty good company. And the cons here: longer funding time than competitors and limited information on the website. And we also have found OnDeck. OnDeck is kind of cool for repeat borrowing. So the starting rates on OnDeck's line of credits may seem a little high, but discounted rates on future financing make OnDeck worth looking at. So that's right. So OnDeck gives repeat borrowers discounted rates. You can even get discounted origination fees when you repeatedly borrow from OnDeck. So sure, it has a relatively high APR, but then when you decide to apply for a term loan in a year or two, that repeat borrowing discount might come in handy. In other words, if your new line of credit is just the beginning of your business financing needs, then an OnDeck line of credit might be your first step to discounted future rates. So besides fintech lenders, you also have traditional banks, and some traditional banks are also great for established businesses. Even if the business is having bad credit, going through some I would say some financial hardship, some traditional banks will actually come to your rescue, so to speak. So traditional lenders offer some of the lowest rates and highest credit limits you can find. Plus, many of them offer a choice of both unsecured and secured business lines of credit. Remember though, so the why have I not talked about them earlier in the show? It's very simple. Big banks have much higher application criteria than most online lenders do. For example, pretty much all banks require your business to be at least 2 years old, and some insist on more than that. To get a Wells Fargo business line of credit, for example, your business has to be at least 3 years old. And while the alternative lenders that I just spoke about look for credit scores ranging from the low to mid 500s, most traditional lenders accept only credit scores between 650 and 700. So put simply, banks typically offer lines of credit to only their most creditworthy borrowers. But having said that, there are cases where they will do an exception. So we're showing you right now on the screen business lines of credit from traditional lenders. So you have Bank of America, Chase, Citibank, KeyBank, PNC, Santander, Banco Santander, TD Bank, US Bank, and Wells Fargo, along with the minimum and maximum line of credit, the lowest listed rate when available, and the minimum annual revenue. One thing I want to say is that all the lenders here will consider bad credit business borrowers as well as startups under specific circumstances. For example, if you have a solid loan application, if you have collateral, you want to put up collateral, or you want to put up personal guarantee, etc., they will look at your application. Step number 10, last but not the least, I want you, after doing all these things that I just spoke about, I want you to apply for a business line of credit for bad credit. Now, so you have to think about, you have to find the lender that suits you, the lender that lends to the industry you're in. And remember that most fintech lenders have streamlined their application by fully digitizing it. So they have a fully digital application process. So after completing a short form, you'll then have the option to connect your bank account so lenders can examine your cash flow or submit bank statements. So this is pretty cool. If you want to have a digitized application process, that's pretty cool as compared to a traditional banking lender. It's up to you. For us, we would recommend that you go with a fintech lender because it's just faster and you have a wider variety of business lines of credit for bad credit. So when you receive an approval, you want to check the following details to ensure they are in line with your business. So the amounts, the terms, the payment schedule, the rates, and the fees. Very important. Anything that is any discrepancy that you find on the approval, please, You want to contact your lender. You want to clarify everything with your lender. Very important. All right, folks. This is it for today's conversation. I was just having a clear chat with you about how to get a low interest business line of credit for bad credit. There are 10 steps, 10 proven steps you can take to actually get the business line of credit that you need. First, you want to run your business as a legit business. Number 2, you want to learn how to qualify for a business line of credit. Number 3, you want to apply when you don't have an urgent need. Number 4, you want to compare your business lines of credit options. Number 5, you want to avoid the top 3 business line of credit application mistakes. Number 6, understand the total cost of interest rates and also the fees. Number 7, you need to meet the requirements and prepare your paperwork. Number 8, you need to know your business line of credit rates, terms, and fees. Number 9, you need to find the best business lines of credit for bad credit. And number 10, you need to apply for a business line of credit for bad credit. Thank you so much for your attention. I really appreciate it. I'll see you another time. But until then, remember, stay marvelous.